Good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for Wednesday, the 4th of January, 2023, the time 6:20 p.m. Central Time. So this is the week of labor. What do I mean by that? Well, we had today the JOLTS report, tomorrow the unemployment claims, which you get every week on the unemployment claims, but then we get the all-important jobs report. So the JOLTS report today came out stronger. You heard me, stronger for December than it was in November. The market's been looking to see when do employers start pulling their help wanted ads. They increased them. So if you want a job, it's waiting for you. In fact, I think it's 1.7 ads for each job out there. It's almost 2 to 1, right? Unbelievable. People want to hire people. That is not what the Fed wants to see. The Fed, if you saw the FOMC minutes come out, not one member thinks they're going to drop interest rates this year. Now, that doesn't mean that can't change. However, not one member. And they are committed to fighting the inflation. They are looking over their shoulders to see where does inflation go. I think everybody's watching that. Now, they're getting a little bit of a break in the energy prices because of China. China's COVID cases are out of control. The WHO organization, World Health Organization, is asking China, come on, be transparent. What is going on? Because nobody has any numbers. China, of course, is saying, oh, the Western nations are putting up barriers to our citizens coming there. Well, of course they are. We don't know how much COVID you have, what the situation is. We just know what we're hearing. The crematoriums, you're getting 10-minute burial service, and then the next couples are coming in with their families for the next person. That's not normal. And we hear they're running at crazy hours, okay? Are those stories false? I doubt it. Why are the streets not as crowded as they normally are? I wonder about that. Now, you got another problem. You have the lunar holiday coming up at month end. People travel like mad. They'll spread the COVID. You'll get probably into February, even worse, or whatever that means, maintaining a terrible case. But my guess is, in looking at how it's worked in the Western nations, come March, a different world will be there. So let's call it the end of the first quarter, beginning of the second quarter. I think you'll see that the traders start anticipating a turnaround in demand. They'll not wait for the peak. They'll anticipate it. That's how it works. The other thing on energy that is helping inflation is natural gas prices are crashing. Not only here, they're below the war, the beginning of the war with Ukraine in Europe, in many areas. So that big rush, the worry about it, well, Mother Nature has fought the Russians. They've given the best start to a new year in weather that we've seen in a very long time in mild temperatures. It hasn't been that ungodly cold, and there's plenty of natural gas around. This is the good news. It's especially been good news for the UK, which has got those price caps on, and they think they'll benefit a little bit now because you might not have to hit those caps and the government will save some money. Another report that I wrote about today. That brings me to my full research, by the way. You know, I put out Monday through Thursday a minimum of 2 written reports a day. I write them for you. I don't want you to be reading for a long time. I write it in a way that I think you can get through my report in a couple of minutes. Do you hear it? Not 5. A couple of minutes, 1 to 2 minutes. You get the points I'm making. You see it. I write in bullet points. I make it easy. I give it large captions. I had one of my clients write to me today, I don't have time to read it. If you can't read in a minute, what do you want from me? I mean, it's a minute or two. I've timed it. I write it that way. That is what I try to do. The whole idea here is give you ideas to think about, show you what's going on, and then I back it up with videos. Videos are the story, okay? But then I do a morning video. How do I update it during the day? Where do you get your ideas? If for futures especially. Spiders and ETFs don't trade the way the futures do. The leverage in futures changes everything dramatically. You know, it's 90% leverage for everybody. That's just how it works. And there's no interest charge on that money. Well, in the future, in the stock, spiders whatever you're trading there, most people are trading with the cash in their account, but if they're not, it's 50% leverage. It's a vast difference, and the volatility is not the same because of that. Just keep that in the back of your mind. Okay. I'll talk about this at the end of this, and I'm going to give you a free trial to my full research, so stay around for it. All right, in the S&P, the battleground's crystal clear. You're sitting here at the 18-week average, hugging it, waiting on these reports to get an idea. And yes, we'll get more reports during the month that'll tell us about inflation, where's it going, how's it going. But right now, this is the week of labor. And understand that, okay? You got the FOMC report out of the way. That was a big one. Tomorrow, you'll get some unemployment. The jobless claims, rather. Okay, but Friday is a big number because it gives us an idea as the Fed's current hike raises, are they working, or is there still that lag effect? Or maybe they just won't work. I don't know. At some point they'll work, believe me. You raise rates high enough, it has an impact. The trick is, how do you raise them high enough and then roll them back to avoid a big recession? That's what nobody knows, and that's the reason the Fed is going with quarter-point hikes. They're talking about it rather than half. They're waiting for that impact, and they know it's there. It's a lag, and they're waiting to see it. I hope they're right. When we look at the March micro mini S&P, you tell me what's going on there. It's pretty evident. Sideways action. You peaked, you came down. The market's waiting for what is the next move. Do we have a trend? We do not. You have a higher high and a lower low setup. You had an outside day down 2 days ago that took that out. Remember, we're into Wednesday's trade already. Where's the resistance? This has been an attempt at a bear market rally. Why a bear market? Because the market is underneath the 18-day average, which is underneath the 100, and the 100's under the 200. So the rally back up is a bear market rally. That's the way I would define it. The bias is down. Resistance should be that 18-day average. But obviously, the jobs report can make anything happen come Friday. Is there anything to play here against the Bollinger Bands? There isn't. Nothing there. We certainly see solid resistance points, but getting up there would be a trick. And in the S&P, you've lost. This is so important. You lost the embedded reading. What does embedded mean? The embedded reading occurs, let's see if I can get this to come back, when you get several days in a row minimum, and I teach this in my charting courses, of the red and the blue numbers staying underneath 20. Now, the sign that the market's going to lose that momentum often happens before price. Doesn't always, but it often does. And it occurs if you close over 21 in the red number. Here you got it. So I'm looking for a move back to the 18-day average of closes. Don't know if we'll get it or not, but let me take you here. And this is what I'm thinking you're going to do. By the way, in tonight's report that I have yet to publish for the people, for my subscribers, and I'm going to offer that to you as well, I reviewed the Santa Claus rally. It worked in 3 out of the 4 different stock indices. I pointed out, I show you the date it began. Today was the end of it, according to Yale Hirsch, Stock Trader's Almanac. Write that down. His son still publishes it. I had him on my old TV shows called Stocks, Options, and Futures, which was nationwide. What is now CNBC was the old financial news network, and I had a noon show, probably the largest in the country at that time, and it was call-in. And we couldn't get enough phone people to handle the amount of calls we were getting. And then I would host a show. And we would then have an audience, and we would bring in different people from around the country, all the big names. And I'd learn from these guys, but then you could ask them questions, and the audience would ask questions. It was a ball. But Yale was on the show with me, and I certainly probed him on it because that's one of the things he became famous for, besides the almanac, and that got him real big recognition in the 70s. And this is, I think, the 7th year in a row. It was a feeble rally, no question about it, but it occurred because you had gains over I think from the 23rd to today. When you take a look at the micro mini NASDAQ, nothing. Flat market, flirting with losing the embedded reading. Hasn't lost it yet. The pros are still selling it short, but I think they're going to be, like I said, very cautious going into both the unemployment claims, then they'll get a little bolder, and then you got to figure out how do you want to go through the jobs report. That'll be the big report. In the Dow, you've been oversold. How do you correct oversold? You typically try to rally, and that's what this market's attempting to do. And in the Russell, oversold, trying to get back up here and rally. That's what I see going on. Let's see if we can get this to load the VIX. If not, we'll just move on to the next one. I should have done this ahead of time. My fault. I had it working before. We'll move on to the next chart. When we take a look here, it calls it a different way because these are futures charts and it's got to go the service and call it a different way. In any case, you're up to key resistance in the bonds. This is a short covering rally. You had an embedded situation, I believe. Let's count together. We're looking for several days in a row under 20. Do you agree that they're under 20? 2, that's several. Now, if you get a reading over 21 on a closing basis, you want out because the odds are the market's going to make a run to the closest main moving average. Tell me, it all happened at one time, but it happened. And that's the important thing. And when you go to the 10-year notes, it's the same situation. I'm expecting it to get up to those numbers and fight them. But it was a sign that you've lost the downside momentum. Now, in this particular case, price and loss of momentum move together. So often, just so often, it happens that the loss of the momentum happens before price action. And you just sit there and you're going, whoa, this is screaming at me, get out of my long or short, because the odds, doesn't mean it'll work, but the odds favor you're going to reverse for a bit. In the dollar index, you got down to the lower Bollinger Band zone and you came back to the 18-day average. Beginning of the year, people are taking money off the table, especially going into the report. Flip-flop of it is the euro. You can see it got down to the Bollinger Band 48 hours ago and right back to the 18-day average, exactly what we teach. In the British pound, I told traders last night and this morning, last night especially, go short this market. And then during the day, and that's the importance of my twice daily updates, I said, no, I don't like it. And this morning in my morning subscriber video, I said that. I said, I think it's at the point where you're going to have to drop an awful lot to not lose the embedded reading. It doesn't make sense. If you've got a small profit in the market, take it in the video. And I said to break even in the written update at the very worst, and it certainly allowed that. Thank God. I didn't want to get a loser out of it. And you lost the embedded reading. You got a reading of 25. If we go back and you take a look at the close of business on Wednesday, 21.49. I got lucky. Okay, but is it luck? To a degree. In Bitcoin, the market's now neutral. You're back to the 18-day average. You're oversold. Got to leave the market to tell us what the next move is going to be. Then we get to an area chart of the price difference. One of you wrote, and you were so right. I had a ratio chart up. Now I've got the price difference chart up. Thank you for catching that. And I truly mean what I'm saying. I do this stuff, and I've done it so long, sometimes I put a division sign rather than a minus sign in the formula. But I always look to see, are they narrowing, widening out? What are they doing? I don't like the ratio chart. I like the difference chart. I find it better. Now, I know what you will say. Are they going to be month to month? I try to do that. So I'm using the March contract for both here. And when April rolls around for the Brent, I'll probably move both there because it's easier to look month to month. You go to metals, you can't do that. It's going to be the Feb gold versus the silver. If you're going to do ratios, there's a difference. You got to always look at those. When we take a look at Brent, you know what I'm going to tell you. If you get down to this Bollinger Band, I think that's where the pros are going to cover their shorts. Now, you were just up here at 87. You do realize in no time at all, it's the beginning of a new year. 48 hours, you're down $9 from that peak. You don't think that's a lot? You don't think that the pros, what I teach, were coming out against that Bollinger Band? You don't have to agree with me. Take the course, go back on your charts, come to your own conclusion. Same thing with WTI. Same identical thing, oversold. Maybe you get down there, but I'd bet that the pros cover their shorts down there. That's what the work is screaming. In the heating oil market, the resistance has been the 100-day in green, the 200-day average, up to the Bollinger Band, fighting a battle, and all of a sudden coming back down. Natural gas continues this long bear market. I was on the chart just looking the other day and saying, is that true? We were up at 9 and we've lost 2/3 of the value. And I told my clients today, I said, because this market's lost 2/3 of the value, even though it is in an embedded reading, I don't know that I want to play the short side until you get some form of a correction. And maybe what we'll get is the market actually forms a bottom instead of that. But there's a point where you do pick up your chips and you say, hey, markets that lose 60, 70% of their value, 1, 2, 3, in a 3-month period, 4-month period, I don't know that I want to be playing the short side of it. Okay, that doesn't mean I'm bullish. I don't have to play. And that's what trading's about. Knowing when you want to play, what not to play, and where do you go. And I try to point this all out between my full research, because in this, you get my morning videos, but I want to update. I want the ability to update throughout the day my thoughts. So the full research gives you my written updates, and I'll update there what I said in the morning. And then in the night, I'm preparing you for the trades, and we'll review all that in the morning videos again. I'm not going to do videos all day. They're 20-minute videos. You don't have the time for it other than once a day. I've done my studies with people, talk to them, and they go, that is more than enough. I want to give you this for free. If you haven't tried my services, try them, the whole shoot and caboodle. The free charts, the mobile application, give it to you for 10 days for free. You decide. There's no obligation. I don't want a credit card. We'll need your name. You sign up on the website. We'll have to get hold of you to get you live quotes in the charts. The exchanges are going to ask that we have your address and so on. If you want that. If you don't, you have to give it to us. It's that simple. But you're not going to get live quotes. I promise you that. They, not I, control the quotes, all right? And that is their rule. If you're going to get a free trial, they want that list of it. They don't sell it. They don't do anything with it. But I don't care if you go to my company or any other. The exchange runs the rules. It's their quotes. They're not public domain. How do you get this? You can go to our website under free offers or move your cursor up over here. Can you call my staff and they'll get you set up? Just like that. So try that as well. In the meantime, I'm Ira Epstein. I appreciate you watching. If you like these videos, please give me a thumbs up. By the way, after January 15th, we'll hold the webinar. It'll probably be the week after that. I'll be trying, after the labor report this Friday, looking hard for the markets to do some special reports, the video reports. Look for it. If we have your email, if you've signed up for my offers, that's how you find out about it. You'll get an email. You go in and you can look. I'm Ira Epstein. You have a great evening. I'll talk to you in the morning.